about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny, but it confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with 2 hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってます。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer. But humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh.
But to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in the laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get to Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like
feathering
me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
You
a
had
brand.
that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
Do you
everyone.
want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward. In 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Jason Kelly on Bloomberg Radio.
All right, live from my home in New Jersey and also from our Bloomberg Interactive Brokers studio at Bloomberg headquarters. It is Wednesday, September 9th, 2020, also streaming on YouTube. And Jason, nothing like a day where stocks are on sale. A little bit of a discount because of the selling that we've seen over the last few days.
Yeah, that whole buy the dip thing, apparently people were listening to that because it did dip over the past 3 days. We were talking about it extensively yesterday, and today roaring back in many ways. And we're going to get into why, because there are a number of things at play here, as there often are.
Yeah, it's never very simple, is it? All right, let's get you going, though, on this Wednesday with a check on the trading day. Here is Charlie Pellet. Hello there, Charlie.
Well, hello there. Happy Wednesday to you both. Let's get right to the numbers. I'll give you the why in a moment. S&P up now by 81 points, higher by 2.4%. The Dow up 638, up 2.3%. We're at or near session highs. NASDAQ surging 290 points for the NASDAQ Composite Index, up 2.7%. The NASDAQ 100 Index also up now by 2.9%. 10-year, the yield 0.69%. Gold up 0.7%, $19.45 the ounce, and West Texas Intermediate crude up by 3.9%, $38.19 a barrel on West Texas Intermediate crude. Bottom line here, stocks are rebounding from a 3-day rout, and as you guys mentioned at the open, dip buyers pouring back into the market and those beaten down tech shares. Recapping equities higher with the S&P up 80, higher by 2.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser. This portion of Bloomberg Business Week is brought to you by Commonwealth Financial Network. Be the independent advisor you've always wanted to be with all the support you need to get there. Visit commonwealth.com to learn more. Carol Masser, let's
Jason
set the
Kelly.
Business Week agenda.
Yes.
If we can. Dave Wilson is with us, stocks editor for Bloomberg, author of The Chart and the Stock of the Day. So kind of a different tone, to say the least, Mr. Wilson, on this very green day across the board.
Yeah, to put it mildly, Jason, I mean, all 11 of the main industry groups in the S&P 500 are higher. Technology stocks are leading the way. You know, big tech in the broader sense. You know, think Facebook and Google's owner Alphabet and Amazon.com, also higher as well. You know, Apple and Tesla, which have really been beaten up the last few days, turning around here. Apple's up 4%, and that's after being down over 4 days by about 16%. That was the biggest drop for the stock since October 2008. Of course, Tesla yesterday down 21%, its biggest single-day decline ever, and the electric car maker's up about 6%. And then you turn to the S&P 500, which Tesla is not a part of. It's part of the reason why the stock's been beaten up lately. Yeah. And you see chip makers really front and center, specifically Qorvo, which came out with fiscal second quarter forecasts that were well received. Revenue projection beating analysts' highest estimate in Bloomberg survey, and it's up 7.5%. And it's taking companies like Skyworks Solutions and NVIDIA and Qualcomm along for the ride.
Well, and you mentioned Tesla, and maybe it's been beaten up, but it's still up 318% this year, which brings me a little bit to Vince Signorella, who's also joining us. He is our global macro strategist. So tell me, Vince, because you've got a cute little column that's out there. I've been sharing it with all my friends.
Did you say a cute little column?
All right, I believe I said...
Hey, little column. Oh, hey, little column.
I believe I said cute and clever, Jason. You just got to listen more closely. But you talk about the overvaluations of tech, and you say if tech is overvalued, then most stocks are as well.
Yeah, I mean, if you look at the equal weight index of the S&P, it's in lockstep right now with the NASDAQ. So, and that's not been the case in years past. There has been some disparity. So if you're looking at NASDAQ and saying, well, the NASDAQ's clearly overvalued, then you have to say the overall market is. Of course, if you're on the other side of the conversation, you're saying tech isn't overvalued. It's the new wave of how things are going to be done in the future. Therefore, the overall market looks more or less healthy in this situation. So you kind of can't have your cake and eat it too. The correlation is a lot closer than people seem to realize.
So everything's overvalued.
Well, you know, if you're in a bear market sense, if you believe the glass half empty, you're going to look at that chart and say, you know, it's overvalued. If you're a bull, you're going to look at it and say everything's just fine.
Yeah.
I like the more or less healthy read of the market. I think that's good. That's the one I'm going to stick with.
I love the clever and cute, but hey, that's
I think cute little. You're a cute little column. Yes, you are. Explaining what's going on.
Oh my God.
Dave Wilson, talk to me about what you're seeing when it comes to the chart.
Well, I will tell you that I put Vince's chart out on my Twitter feed.
Heyo.
Dave, if you haven't seen it already, there it is. And, you know, in fact, my chart of the day is out there too, which kind of makes a connection between stock performance and guess what? Fundamentals, earnings and sales this year. It's there. You just got to look for it.
Well, there you go. Enough said.
That was cute and clever, too.
That was cute and clever. Dave Wilson, cute and clever. Cute little stocks editor that he is. All right, so Vince, give us your parting thought as we try and make our way. I mean, the backs and forths. I was talking with one of our colleagues here in our global headquarters, and she was just saying, you know, we have become a little bit numb to some extent to these wild swings. Is this what it's going to be, especially running up to the election?
You know, to some extent, yes, but also I think you have to hold your breath over the next couple of weeks. We've had the Labor Day holiday. 4th of July holiday didn't do us so well. Got a spike in cases in Europe. UK is now starting to pull back a little bit. Same thing. You got back to school, back to work in New York City. So New York City was, to me, is the test. It was the beginning of the downturn.
Yeah.
And now we see New York City going back. Obviously, the population in dense places. The schools going back. If New York City can handle it, you feel good about how the rest of the country is going to handle it. If New York City can't handle it, you got to think that everybody else is going to pull back on it.
Yeah, really, really good point. Good observation. Vincent Signorella, you're full of cute little observations. Global macro strategist for Bloomberg.
Vince,
on
the
phone
T-shirt is on the
from
way.
White
Cute and clever.
Plains. Our thanks as well to Dave Wilson, stocks editor. He joined us from New Jersey.
Dave gets cute and clever in chart.
Cute, clever chart. Cute and clever chart. Yeah. That's going to be his T-shirt.
Yeah.
T-shirts for everyone.
T-shirts for everyone.
We're going to have a T-shirt SPAC.
We are going to have a T-shirt SPAC.
Exactly. We're going to raise a SPAC and just buy a bunch of T-shirts.
Yeah,
Can you do that? I think so.
I call that a bubble. What do you call that?
Yeah, listen, I call it a great business model. All right, coming up, we've got a lot to dig into, a lot of the most read stories today. And as usual, they run the gamut. AstraZeneca, those delays. Someone in the trial getting sick. What does that mean? Tesla's activists, investors. We talked a little bit about TSLA. Can't get enough of that.
There's always something going on with Tesla, and our Dana Hull, man, she is our go-to person. So we're going to talk about that story. Also, we're going to talk about the world's race against greenhouse gases. This is a must for everyone on this planet, and also a must for everyone in our audience. Fed Chief Jay Powell channeling the monetary maestro.
Yeah,
you know who we're talking about.
We're talking about Alan Greenspan, and part of the reason we say it is because Greenspan is one of those names that, even for people sort of outside the markets, you kind of get a binary reaction. It's like hero or zero in many cases. So we'll ask our own Rich Miller what we make of Jay Powell, kind of making his own way, putting his stamp on the Fed. We've got the CEO of Mahindra Automotive North America talking about local communities, and also we love us some business schools. You know that, Carol.
We do indeed. We've got the dean of the Robert H. Smith School of Business at University of Maryland. She's going to talk to us about the double pandemic that's out there. And we're going to wrap up with something for all you pet lovers. I'm definitely all in on this. Scout's been waiting for this one.
Scout is going to make
She's
her
up on
voice
the chaise,
heard.
just waiting.
There she is. All right, let's do the Bloomberg Business Week Bite of the Day. Before we get to all that, one number that tells us a lot. Today's number, 968,673. U.S. airline passenger traffic reached new heights over the Labor Day holiday, flirting with a daily total of nearly 1 million flyers for the first time since the COVID-19 pandemic erupted. We should say new heights in the pandemic. That many people passed through security screening portals at U.S. airports. That was 44%.
So not even half of what it was at Labor Day last year. Yeah, but definitely an improvement. All right, let's get to world and national news headlines. Over to Nancy Lyons we go. Hey, Nance.
Hey, Carol. President Trump can be heard on a newly released audio tape explaining how he intentionally downplayed the severity of the coronavirus. CNN aired the tape that was recorded on March 19th during a Trump interview with Washington Post associate editor Bob Woodward.
Well, I think Bob really, to be honest with you.
Sure, I want you to.
I wanted to always play it down. I still like playing it down.
Yes,
because I don't want to create a panic.
Woodward's new book is titled Rage. Democratic presidential hopeful Joe Biden is seizing on the revelation during a campaign stop in Michigan.
Now, while this deadly disease ripped through our nation, he failed to do his job on purpose. It was a life and death betrayal of the American people. Experts say that if he had acted just 1 week sooner, 36,000 people would have been saved.
One of the most promising coronavirus vaccines has stumbled, putting safety in the forefront of the race to deliver a vaccine quickly. The director of NIH, Dr. Francis Collin, told senators today Operation Warp Speed, the push to come up with a vaccine, will not be influenced by politics.
None of these trials will go even to an FDA review until the DSMB, the Data and Safety Monitoring Board, which is the only group that gets to see what happened as far as protection, as far as safety events, looks at the data. And these are not federal employees. These are very experienced, qualified scientists.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thanks so much. So, Carol Masser, it's not like we see each other anyway, but if we did... we could go have lunch together in New York City. As long as 75% of the restaurant was empty.
Step forward. I was listening earlier when we reported it up on Bloomberg Radio. September 30th, indoor dining in New York City can resume at 25% capacity. Listen, this is a step forward, especially important considering it's going to get cooler. And even though the sidewalks of New York have been open for restaurants at, with social distancing nonetheless, being able to maintain some kind of level of activity once it gets cooler, this is going to be important for our restaurant community. I think this is crucial. It's also, to me, I just love watching how the New York metro area, New York City in particular, is kind of moving ahead very slowly, very cautiously, watching the numbers to make sure they don't screw up.
Yeah, I mean, this is huge, though. Like, it
is huge.
And I really liked what Vince Signorella said toward the end of our segment, which is, and listen, we're a little bit partial to New York City. I'm standing here talking to you from New York City. But even from the perspective of the pandemic, we know that unfortunately New York was on the front end of this and really had to deal with it in such a meaningful and in some cases tragic way. We've been in lockdown to a large extent. Now we're loosening up a little bit, and how New York goes really is going to determine, I think, how the rest of the country acts and how the rest of the country feels as we go forward.
Well, fingers crossed, right? I mean, we have been kind of the test lab in terms of how bad it can be and what you need to do to get ahead of it, and very stringent in terms of locking down. So you do hope, fingers crossed, arms crossed, everything's crossed, that the rest of the country watches so that we don't slip back as a whole. Because listen, the economy needs it. The whole U.S. economy needs everybody to be on board.
Yeah, absolutely. We do, and it's an ecosystem, and it's all interconnected. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with a headline out of California. The state is reporting the fewest daily virus cases since May. U.S. equities, they are rallying today. Buy on the dip with the Dow, the S&P, and NASDAQ at or near session highs again, with the S&P up 82 points, up now by 2.5%. NASDAQ is up 308, up 2.8%. NASDAQ 100 index up 3.1%. Dow Industrials now advancing 654 points, up 2.4% after yesterday's declines. 10-year yield 0.70%. Gold up 0.7%, 19.45 the ounce. And West Texas Intermediate crude up 3.5%, 38.05 a barrel. Brent 40.81, up by 2.6%. Recapping, stocks rebound with the S&P up 83, up 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser. Delighted to have back with us next Alyssa Rapp, CEO of Surgical Solutions, joining us on the phone from Deerfield, Illinois. And Alyssa, you've been so good to keep us up to date on what's going on, really on the front lines of this pandemic crisis, because you've got workers on those front lines at hospitals, healthcare facilities. So I guess I would just start there. What are you hearing? Like, what's the anecdotal evidence and the feel that you're getting as you talk to your folks?
Well, Jason and Carol, it's a pleasure to be back here with you today. And interestingly, the feel on the ground today, September 9th, is very different from when you and I last spoke. We are not today seeing COVID dominating our internal headlines in terms of what our ground game is at these hospital locations. We operate in 39 hospitals across 9 states and have big hubs of essential workers in New York City, Houston, Tennessee, Louisiana, and Kentucky. And even in Houston, where there had been a major flare-up in the last 6 weeks, things seem to be more under control from a healthcare standpoint. And what's dominating internal conversations is not the surge in COVID, the ongoing surge in COVID in healthcare environments, but really the surge of cases that had been canceled, and how do we continue to staff all of that extra volume that continues to be rescheduled as a result of the first major COVID wave.
Alyssa, what have we learned? What have we learned along the way?
I think we've learned a couple really important things, Carol. First of all, I think we've learned that the health systems with great strategic partners, obviously Surgical Solutions being one of them, but many others as well, that can really lean on partners to risk share in terms of staffing, in terms of equipment, in terms of repairs. There's so many things that hospitals need to do to keep functioning at maximum efficiency. And if all of that burden rests on them and them alone, staffing up and down and expanding services up and down is a lot to bear, in addition to the managing and focus on patient care. But those with great strategic partners that can flex up and flex down, I think have had an easier time adapting to this new normal. And I also think that it's a really, really, really complex time not knowing what's to come. And so those who are stockpiling PPE, or those who are making sure people have time off now, so clinician burnout isn't as big of a factor 1 or 2 months from now when the flu season is upon us, and the potential resurgence of COVID upon us is, I think, important to remember.
Well, I just think even what everybody learned from New York Metro of just, getting ventilators from California to come this way, like just even that kind of idea to know that somebody else has your back a little bit, or that equipment around the country could be shared. I mean, talk about taking some stress off you, right?
No, totally. The degree that there's more collaboration, I think, is crucial. And I also heard Dr. Fauci recently discuss to the Economic Club of Chicago that all decisions about reopening must be made locally. Right. So my children are 8 and 5 and back in school in a hybrid environment, mornings Zoom, afternoons 8 student classrooms in socially distant contexts with masks. And I know other districts with higher incidences are in full lockdown, and yet others in Europe, my cousins over there, their children are back in school even without masks. So I think it really has to be made, continue to be made on a local level, as Dr. Fauci recommended.
So if you don't mind me being so bold, let me ask you, as a parent and as someone who knows this so well, this story so holistically, like, what do you make of back to school so far?
We're very blessed to be in a wonderful public school district where our children are each at desks with shields. Our educators were provided 70 extra virtual training sessions this summer, so we are in an unusually positive position of feeling like all of the extra safety precautions that could be taken are. I have to attest every morning on an app called Crisis Go, our children's temperature and health and wellness to attend that day. It's daily or they're not admitted in. So I'm seeing it being handled as best in class as it could be. I understand if that's not the realities of one's school district or of one's personal circumstance, that it might not be, going back in a hybrid context might not be as comfortable for others. But on the same time, I have most of my essential workers are staying put in their hospitals and their geolocations, but I still have 10 essential workers who are starting to fly around the country again. Yeah. And so, at some point one has to be very practical and careful and dip their toe back into more free movement, but I don't feel like we're entirely there yet. And frankly, the hybrid model is probably as comfortable as I am right now in terms of freedom of movement.
So what do you think realistically, since you've had a front seat to all of this, Alyssa, in terms of the vaccination talk and finding of a vaccine and when it really reaches out to the masses, is it an early 2021 story? Is it a mid-2021 story? Realistically, you run an organization, a huge organization. What's your planning on this?
So when I heard the CEO of Merck talk about this recently, Mr. Kenneth Frazier, he was saying it was not a question of when a vaccine would come out, but its efficacy. So I believe there will be vaccines in spite of stumbles from the vaccination standpoint. As of yesterday, I read in the news, I think there will be a vaccine by the end of the year. What I cannot attest, because I'm not close enough to it, is if it will be 60 or 90% efficacy. And the efficacy will, to me, determine the degree to which we can broadly reopen.
That is such a crucial point. Jason, I know it's something we talk about. You're right. I mean, something that's only 50% efficacy is not necessarily what we need right now, Alyssa.
Correct.
Yeah, no, big questions, I feel like. And, Carol, you and I almost joke about this. Like, the next 2 weeks are going to be critical. The next month is going to be critical. I do think the next month is going to be critical. I feel like once we get to the beginning of October, and certainly into October, we're going to have a better sense.
It's a little colder, right?
Right.
And
we're going to have
especially in the east.
And kids back to school, like Alyssa's and others, starting to get a feel for what's working and what's not. Alyssa Rapp, really good to catch up with you. Thank you so much. Chief Executive Officer.
Sorry, I'm interrupting you a lot.
She's the CEO of Surgical Solutions. She joined us on the phone from Deerfield, Illinois. Carol?
Someday we're going to talk wine with her, though. But maybe when things really calm down.
Yeah.
Because she knows a lot about wine as well.
We're going to talk more about the virus, actually, coming up in just a few minutes. Check in with Michelle Cortez, our internal expert. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversations today about the virus. And it's important that we, as we just were with Alyssa, you know, sort of looking at this very holistically, this is complicated. And so we have to understand the therapeutics, the vaccines, the response, the healthcare system. So we're going to dig into some of the latest on the medical side with Michelle Cortez just up next.
Yeah, and there's going to be delays in getting a vaccine. That's a normal part of the process, but we're going to have Michelle Cortez, as you said, really break it down for us. Let's, though, get back to Charlie Pellet. Check on your top business stories. Hey, Charlie.
Well, hello there. I've got a headline out of Europe in the payments business. Italy's Nexi and SIA are close to clearing a major hurdle to a potential merger that would create one of Europe's biggest payments providers. This, according to sources who say that SIA is finalizing an accord to keep Italian lender Unicredit as one of its main clients, which has been a key sticking point in determining its evaluation. Sources now say AstraZeneca's clinical trials of the COVID-19 vaccine it's developing with Oxford University could resume early next week. This, according to the FT. The news that AstraZeneca paused tests of its experimental shot after one patient became ill is a routine event for the pharma industry, but in a world crippled by the pandemic, the setback comes as a reminder that vaccines can fail, or worse, they can sometimes deliver more harm than good. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
This kind of a pause is not unheard of. Usually what it means is that the company needs a little bit of time to figure out if the adverse effect is directly related to the vaccine or if it happened because of some other circumstance.
And we've got more on the topic coming up in just a moment right here on Bloomberg Business Week. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Today, shares of AstraZeneca, the ADRs, traded here in the U.S. down 1.5%. Pfizer up by 1.6%. Rivals BioNTech up by 2.8%. And Moderna, its shares pushing higher by 3.6%. Bargain hunting on Wall Street today after several days of losses. The S&P rebounding by 84 points, up 2.5%. Dow Jones Industrial Average up 644 points, up 2.3%. NASDAQ up 320, that is a gain of 3%. 10-year yield 0.70%. Gold up 0.8%, 1947 the ounce. And West Texas Intermediate crude now up 3.8%, 38.14 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. As Jason mentioned, this half hour we've been really looking at the virus from a couple of different angles. We just talked with the CEO of Surgical Solutions. Right now, we've got to address what is one of the most read stories on the Bloomberg, and it talks about one of the most promising coronavirus vaccines stumbling a little bit. AstraZeneca is what we're talking about. So let's get into it with our Bloomberg News health reporter, Michelle Cortez. She's on the phone from Minneapolis. Michelle, Jason and I always look forward to kind of setting the record straight when it comes to the vaccine and the virus. So tell us what this means, this stumble, because what I've been reading is that you're going to have delays when you create a vaccine like this. That's just a normal part of the process.
Carol, you're exactly right. It's kind of astonishing how quickly and smoothly everything has gotten to this point. We have more than 24 vaccines in clinical trials for a virus that we didn't even know existed, that probably didn't even exist a year ago. So that is astonishing. And as you point out, there are normally hurdles and problems that come up. The way this one has been coming out is a little bit unsettling, to say the least. So we heard yesterday that AstraZeneca had paused its trial. They're saying that it's a very normal thing, that it happens when there's an unexplained illness. But throughout the day today and late last night, some news was trickling out about the condition that we're actually looking at. It's a spinal cord condition called transverse myelitis. It causes inflammation in the spinal cord, can lead to paralysis, and it is something that's worrisome.
And I guess it's also a reminder, Michelle, at just how heightened all of this is and how heightened all of us are. We're both hopeful, but I dare say feeling almost a little bit desperate because our very way of life has been changed. We've seen tens and tens and tens of thousands of people die just in the United States. And there's a sense of urgency that I don't know we've ever collectively felt, certainly in my lifetime.
I would agree with that, but also there is a concern here, of course, that there's belief that a vaccine is going to bring us back to normal.
Right.
But we do have an issue with vaccine hesitancy and skepticism in the U.S. So the idea that some of this information is coming out not so smoothly is a little bit concerning. Also, we did learn that there had been an earlier incident as well where they temporarily paused the trial and didn't disclose that, where they had similar symptoms of paralysis type issues, and it turned out that the patient had multiple sclerosis, and they determined that it wasn't related to the vaccination, although the person had gotten the vaccination. We're not exactly sure why MS develops. So with two potential ties to a neurological condition, at some point people are going to be making a decision whether they're going to participate in a clinical trial, which clinical trial, and then when we get done, hopefully we'll have more than one option. Which one are you going to pick?
Yeah, exactly. Well, there are different types of vaccines, and I've been trying to kind of brush up on it. I'm not an expert, but in terms of the creation of vaccines, right, there's different ways of doing it. And I do wonder, are certain vaccines potentially going to be safer than others?
There are different ways to go about doing this, and it's really, again, astonishing the breadth of approaches that we have already that have emerged when it comes to coronavirus. There are some companies who are building off standard models that we already have, like seasonal influenza, and they're just using a different, ingredient basically in their vaccine. So they're hoping to provoke an immune system response to coronavirus instead of to influenza.
Does that make it safer, Michelle, or not necessarily?
Well, I think that there's two ways to think about it. You have the platform, the way that you're going about doing it. And so for influenza, it's been given to, hundreds of millions, maybe billions of people over decades and decades, right? So the platform is a known platform. Then you're putting in a different portion of the virus, maybe the spike protein or something else. And so it's possible that the body would respond adversely to what you're putting into it, but the platform itself should be safe. Whether or not it's going to be effective is unknown.
Right.
But then there's completely novel ways, like what AstraZeneca is doing. It's not currently used in any approved vaccine. Same as Moderna. Their approach is totally novel and different from AstraZeneca's. J&J is working on a similar thing, but also some more conventional approaches. So there is a wide variety.
So you are our Google on the virus. We could go to Google and look for things, or we could just bring you in, which is what we like to do.
Which is much. I feel like much more helpful and much more enjoyable for us, to be honest.
Yes.
Leave the Googling to the chart of the day. All right, Michelle Cortez, thank you so much. Health science and medical technology reporter for Bloomberg, our Google and our guru. Find her on Twitter at Faye Cortez. Well, coming up, another one of our faves, another one of our favorite topics.
Yes.
Tesla.
Yeah, we're going to get into it. Dana Hull of Bloomberg News. It's one of the most read stories on the Bloomberg. All right, let's get back to World and National News headlines. For that, it's over to Nancy Lyons in our D.C. newsroom. Hey, Nance.
Hey, Carol. Democratic presidential hopeful Joe Biden says President Trump willingly lied about the threat of the coronavirus, costing tens of thousands of American lives. His comments come after CNN aired recordings of the president talking with Washington Post associate editor Bob Woodward. As early as February 7th, he discussed the threat.
It goes through air, Bob. That's always tougher than the touch. The touch, you don't have to touch things, right? But the air, you just breathe the air, and that's how it's passed. And so that's a very tricky one. That's a very delicate one. It's also more deadly than your strenuous flus.
Trump also mentioned in recordings from March that he was intentionally downplaying the virus. Well, both presidential candidates have been putting their focus on the Rust Belt. With less than 2 months until the election, Democrat Joe Biden is pulling away in at least one of them.
A new NBC News Marist College poll finds Biden leads Trump in Pennsylvania by 9 percentage points. The margin is even higher, 19 points among likely suburban voters. That's after the president has argued for weeks that Biden would abolish the suburbs with low-income housing. Meantime, a nationwide survey by Reuters Ipsos gives Biden a 12-point lead, and 538's latest forecasting model gives the Democrat a 73.8% chance of winning the Electoral College. That's up more than 2.5 points from yesterday. Nathan Hager, Bloomberg Radio.
The U.S. military is cutting the number of troops serving in Iraq from 5,200 down to 3,000. That withdrawal happening this month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you on a Wednesday. Is it Wednesday? It's Wednesday, right?
Well, listen, it's crazy because we came back from a holiday, but I had to do the same thing. I'm like, wait, what day is it?
I know. It's like the rhythm is all off. It's crazy. It's interesting talking to Michelle Cortez about the vaccines, the development. There's a whole other side to it, and she alluded to one element, which is, are people even going to take it? But then there's this whole other element, sort of up the supply chain a little bit, that says, but how do you actually get it to people? And it's a huge deal.
It could be a bite of the day. So listen to this. Our Christopher Jasper put this story out, and you can read more about it at Bloomberg.com, or if you're on the Bloomberg terminal, you can check it out. Reaching all 7.8 billion people on the planet with a coronavirus vaccine will require a global airlift, filling the equivalent of 8,000 Boeing 747 freighters, according to the International Air Transport Association. You and I have talked about this with a lot of our guests. It's not just about creating the vaccine, it's also about manufacturing it and then getting it out to people, everyone.
Yeah, and it is no small task to say the least. And, again, then you factor in the idea of saying, all right, well, then you get it there. Then you need to actually get it to people. This is really just about getting it to places. So then it is, all right, so do you have buses, going around? Is it at your primary care doctor? If you're in a rural area, how is it executed there? And then again, there's also this question of, are people even going to take it? I keep coming back to that. That is something that I keep tripping over.
Well, and this group also says that distributing a vaccine in Africa would be, and this is their word, impossible right now, given the lack of capacity combined with the size of the region.
Yeah.
And they talk about a thin surface transport infrastructure and just the complexities of border crossings. There are so many moving parts, to making sure that everyone ultimately gets a vaccine. So fascinating story, and just a reminder how difficult this is.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with this developing story. JCPenney has reached a deal in principle with landlords. This according to a Dow Jones report, which says landlords have struck a deal to acquire bankrupt JCPenney. Stocks are rebounding from a three-day rout. Dip buyers pouring in to beaten down technology shares. Again, U.S. stocks holding close to session highs, with the Dow up 644 points, up 2.3%. S&P's up 83, higher by 2.5%. NASDAQ is up 319, up 2.9%. 10 years down 7/32 with a yield now of 0.70%. Gold up 0.8%, 19.47 the ounce. And West Texas Intermediate crude rallying 3.4%, 38.01 a barrel. Recapping, S&P up 83, up 2.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, one name comes up over and over again in almost every conversation. Yesterday, we were talking about it from all different aspects. Carol, that name, Tesla. The S&P didn't give it an invitation. One of its rivals made a deal, and yet Tesla has had a heck of a year. Let's get into it with Dana Hull, technology reporter for Bloomberg. All things Tesla. She's our go-to. Joining us on the phone from San Francisco. As I said, Dana, really nice to have you with us. So we love to talk to you in part because you really help us separate the signal from the noise here. What's the most important thing we need to be talking about when it comes to Tesla right now?
Well, I think that the S&P inclusion was a surprise because some analysts, notably Dan Levy of Credit Suisse, had kind of expected that it was going to come on that Friday before the Labor Day weekend. But just because it didn't happen doesn't mean that it won't happen at all. I mean, the S&P has discretion to decide when they want to add someone to the index, and given Tesla's market cap, I don't think they take that decision lightly. So, I think, it's and then even though the stock saw this incredible 21% drop yesterday, it's still up roughly 300% for the year. So
I know.
They've still had an incredible year despite the recent sell-off.
Yeah, perspective, right, when it comes to Tesla. Before we get to your story on the Bloomberg, which, as I said, is among the most read on the Bloomberg, tell us, though, about GM and their investment in Nikola. Is that something Tesla needs to be concerned about?
I don't think so.
Okay.
I mean, Elon Musk has always said that he wants to help transition everyone to electric vehicles, and the more competition, the merrier. I think the Nikola tying up with GM certainly came as a surprise, but there's not a product yet. This is not. It's not like this tie-up means that there's some great new big electric truck coming on the market anytime soon. So Tesla still has a leg up on the competition in terms of having actual vehicles that you can buy now.
Well, and it was interesting also, just on the subject of competition, to see, Elon Musk in Germany, I believe, given the VW EV a test drive. There's a certain magnanimity? What's the word? I don't know. But Elon Musk
really
being
cool
magnanimous. Yeah, I mean, which sort of speaks to your point that he really does see himself as the advocate and the evangelist for a totally different way of driving.
Oh yeah, absolutely. And and Musk has made the point over and over again that the number of people who buy electric vehicles is so small still that the competition is not really with other automakers trying to make an EV. The competition is with ICE cars.
Right.
So the goal is to get people to just switch from driving on gas to driving on electricity, and whether that's with the Tesla or someone else, I don't think he really cares. I mean, he just wants people to make the transition and has argued that the competition will be good for all. And I think now he's got such a pole position that all these other CEOs who made fun of him for so long, I mean, it used to be that they just poo-pooed him and everyone in Detroit and Germany was just waiting for the company to go bankrupt. And now they're like, Elon, look what we're doing.
Look at my new car, Elon. Do you want to drive it?
Do you want to drive it? Which is sort of a bit of marketing on their part.
Right.
And Herbert Diess of VW tweeted and posted on LinkedIn that Elon was driving their car. So
it's just been a sea change, I think, in sentiment about how just electrification really is the future. And but even though everyone is embracing it, you think about how many millions and millions of cars are driving on the street right now, and how long it will take to really kind of shift that entire fleet over. It's a big purchase that consumers don't replace like the way that they replace an iPhone or something.
Full disclosure, Elon doing that with VW, it just makes me kind of like him even more. He's just so different, from so many different, so many other CEOs, I guess.
Well, can you imagine the CEO of Coke being like, "Hey, let me try your new Pepsi."
Exactly.
Right.
Yeah. Or Burger King going over to McDonald's. Hey, that's a great shake. Having said that, though, there are some things that he does like other companies do, and that is mandatory arbitration for employees. So tell us about this, because there's some activist investors, and this gets to your story on the terminal, among the most read today, Dana. There's activists who are kind of, pushing Tesla about this action that they do at the company.
Sure. So this really all stems back to the Me Too movement and more recently Black Lives Matter. Mm-hmm. And, we're at this moment where the whole nation is kind of reckoning with the legacy of both sexual harassment and racial discrimination. And when it comes to corporations, as Max Abelson and others have written about quite a lot. I mean, forced arbitration is the dirty secret of many, many companies. Typically when you're hired, you sign paperwork saying that you agree to arbitration without fully, reading it or realizing what you're signing. It makes it very difficult to sue your employer in the case of sexual harassment and in cases of racial discrimination. And what we saw after Me Too was that a lot of big companies sort of came out and said, okay, we're no longer going to require arbitration in cases when it comes to harassment. Now there's kind of a push. Well, wait a minute, why just sexual harassment? Why not everything? And let's talk about race. And so what's interesting is that a shareholder who loves Tesla, very keen on the company, long-term investor here in Oakland, is really taking this fight to the shareholder meeting. And when Tesla shareholders meet on September 22nd, they're going to vote on item number 6, which is a resolution that would require the board to at least discuss how arbitration is used when it comes to employees. And, I think what's really fascinating here is that Tesla is beloved by many investors for its clear, clean energy mission, but when it comes to corporate governance issues and just basic kind of progressive hiring policies, they have not been super transparent. Like Tesla has never released diversity statistics, which is very unusual in this day and age. I mean, most big corporations have put out at least some kind of diversity report. Tesla never has. And that's it. I mean, Tesla actually has a very diverse workforce, but they've just never put out any kind of diversity thing. They don't have like a VP level head of D&I. They on those kinds of measures.
How come, Dana? You talk with these guys. We just got about 45 seconds left. How come they don't?
I think the focus is always on the engineering and the products and not on the people.
Yeah, there's a certain amount of this that is so progressive and so forward-thinking and so around the corner, and then some of it, makes the company feel candidly like sort of adolescent in some ways, and that's the conundrum here.
Exactly. And some investors are like, it's time to grow up and be progressive in more ways than one.
Absolutely. Dana Hull, you're the best. Thank you so much. Tech reporter for Bloomberg. Yay. Covered a lot of ground with us there. Absolutely. I can just wrap it up. I feel so much smarter on Tesla after talking to her, for sure. Just read her stuff on the Bloomberg and at Bloomberg.com, as Carol said, one of the most read. Well, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that is coming up next. Up next here, Jay Powell, quietly but pretty markedly putting his stamp on the Fed, Carol.
He's channeling another Fed chief.
Exactly, the monetary maestro.
By the initials AG.
AG,
a little bit of a hint.
Exactly. All right, Rich Miller is going to be with us in just a minute. Stick with us. We're just getting started. This is Bloomberg Business Week.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, September 9th, looking at a dramatically different market from this time yesterday. Stocks are rebounding from a three-day rout. Dip buyers pouring into beaten-down technology shares. The dollar fell versus major peers. S&P 500 index moving higher. It is up right now by 2.6%, up 85 points at 3417. The Dow also close to session highs, up 663 points, up 2.4%. NASDAQ up 330. That is a gain right now of 3%. NASDAQ 100 index up 3.3%. 10-year down 7/30 seconds with a yield of 0.70%. Gold is up 0.9%, 19.49 the ounce, and West Texas Intermediate crude advancing 3.4% at 38.02 for a barrel of WTI. Tesla bouncing off a closely watched level after suffering its biggest sell-off. Tesla shares, they're advancing today up by 8.5%. Well, as for markets and the economy, David Kelly is Chief Global Strategist at JP Morgan Asset Management.
We're in a recovery, but this recovery is about to slow down. I mean, the sound that you hear outside is screeching brakes because this V-shaped recovery is going to slow a lot in the fourth quarter and into early next year.
More evidence today that the labor market is recovering. Job openings rose for a third month in July, climbing to 6.6 million, close to this year's pre-pandemic peak of 7 million. Two big names involved in packages that show up on your doorstep announcing a hiring spree. United Parcel Service says it will hire more than 100,000 seasonal workers to help handle an expected avalanche of holiday packages from online orders this year. And Amazon is also hiring in the latest sign of how it's prospering while others are faltering during the pandemic. Amazon says it is seeking to bring aboard 33,000 people for corporate and tech roles over the next few months. Shares of both companies are pushing higher today. UPS up 2.6%, Amazon up by 4.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Well, this was a story that jumped out at many of us when it hit the terminal this morning. Just the sort of story that I feel like you sort of want to sink your teeth into. It's the sort of thing that makes you a little bit smarter when you're talking about the Fed, because we go so deep at Bloomberg about the mechanics and all the different things. But at the end of the day, so much of it is about the man or the woman at the top. And Jay Powell, he's been a little bit of an enigma, I have to say, and obviously a man in the midst of a massive crisis. So what is he really all about? We've got the guy who's got the answers. Rich Miller, economics reporter for Bloomberg. He joins us on the phone from D.C. Rich, congrats on this story. I love it.
Thank you very much.
You talk about Jay Powell channeling Alan Greenspan, and honestly, you had me there, and then you just took it away. So take it away here. Tell us what you surmise in this story.
Well, Alan Greenspan made his reputation as the sort of monetary maestro by following a very flexible policy stance and reading the tea leaves of the economy and not reacting rigidly to whatever economic models might say. And that's the approach that Jerome Powell seems to be taking, and that's the approach he laid out in this virtual Jackson Hole conference recently. For example, okay, they say we want to shoot for inflation that will average 2% over time, and we're willing to temporarily allow inflation to rise above 2% to achieve that. But he keeps it all a bit fuzzy, like Greenspan. We're not saying average over what period of time. We're not saying how much of an overshoot we might. It's all very flexible, and that's the kind of style that Greenspan used during his 20 years atop the Fed. And the more academically trained economists who preceded Powell, Janet Yellen and Ben Bernanke, were much more attuned to, what are the economic models telling us? What is the past relationships that we see in these very complex models that the Fed has telling us about how the economy is going to react? So it's kind of a different change in approach.
Well, bingo. And this is what I love in your story. There's so many moving parts to it that I love. First of all, that you reminded us that Greenspan never publicly embraced a numerical target for inflation. I think we've forgotten, right? Because we've been so obsessed, thanks to Bernanke, and others, that this 2% target. But what's interesting is you point out, Rich, that even, you say, the most theoretically rigorous economists would probably agree that the Fed needs to be nimble in battling the coronavirus crisis, given how uncertain the outlook is. Economic models built on past relationships are of limited value in analyzing a once-in-a-century catastrophe. We don't have a playbook, really, on this.
No, we don't. And I mean, you can't throw the models completely out the window, right? I mean, you got to. But you're right. We just don't have a playbook, and you hate to say, well, the Fed is winging it a little bit, right? Because that's a little scary. But it is, right? I mean, they rolled out like program, lending facility after lending facility there in March, just desperately trying to get the markets to stabilize. One didn't work, we'll get another one. We'll go another one. We'll go another one. And finally they've gotten the markets to stabilize. Now the hope is let's try to get the economy recovered. But it is winging it because we're all kind of winging it as we stay at home, right?
Yeah, absolutely. Yes. Yeah, that if there is one commonality among all of us, Rich, that is very true, professionally and personally. That's all happening
going on my T-shirt
every
list.
day. Yeah, we're all winging it. So, Rich, you said something I think really important that I want to dig into a little bit, which is about Jay Powell's background. I mean, he is of the finance world, not of the academic world. Right. And that seems to be playing through pretty markedly in his tenure. Would you agree?
Yeah, definitely. I think you hit a really good point, Jason, that, this is a guy here. He earned a fortune at private equity at Carlyle, right? And so he knows, markets. He knows, how to really dig into a company balance sheet. He's not like a guy who's familiar with these giant macroeconomic models. He doesn't have he's a lawyer by training. He doesn't have, unlike Bernanke and Yellen, he doesn't have a PhD from a really prestigious university. And so that informs him, that informs his view. And also, I think he's also aware, and this was kind of sort of Greenspan's Achilles heel, he's also aware there are risks here of, blowing up asset bubbles, right? Yeah. We've seen the stock market now bounce back really nicely today. But Greenspan, his probably biggest faults were, the sort of dot-com bubble of, 2001, and then, he left before the housing bubble burst. He was there while it was bubbling.
Yeah, definitely while it was getting inflated, that's for sure.
Don't you think about this? This is a guy who, he wants to continue to be able to go to those weekend cocktail parties and people are like, you got this right. You know what I mean? You don't want to be the one who's like, wow, you really screwed it up, Jay, despite all your, experience in investing and so on and so forth. You do, don't you think about that?
Yeah, I think that's right. But Powell doesn't strike me as, he's not the cocktail party guy. But
right. All right. Maybe he's playing bridge on the weekend.
Greenspan really enjoyed the cocktail parties.
Yeah. That's true.
There
Probably,
you go.
Yeah.
Rich Miller.
Where they're different.
Yeah, that's true.
We really appreciate it. Thank you so much. A really smart take. It's one of those stories that you read, and again, I feel like we've got a theme sort of emerging in this show of bringing you some of the best that Bloomberg has to offer today. These are reporters who their depth of knowledge is just unparalleled when it comes to connecting the dots. And I feel like whether we're talking about the vaccine, whether we're talking about an up-and-coming company like Tesla, or whether we're talking about the Fed chair, being able to understand that context and the institutional history and the personal history is really important. So our thanks to Rich Miller, economics reporter for Bloomberg, joining us at the phone from D.C. Check out that story on the Bloomberg and at Bloomberg.com.
It's a reminder, too, of how Fed policy evolves or sometimes goes back to something that we were at before. So, it's a great read, and I agree with you. The depth on his reporting, like so many of our our team, especially when it comes to the Fed, is just fantastic. All right, let's get back to World and National News headlines. We turn things over once again to Nancy Lyons in our D.C. newsroom. Hi, Nancy.
Hey, Carol, there is new audio of President Trump saying back in March that he was intentionally downplaying the severity of the coronavirus. Bloomberg's Washington bureau chief Craig Gordon says the tapes are from an interview President Trump had with Washington Post associate editor Bob Woodward.
He tells Woodward that he received an intelligence briefing about it early in 2020, immediately understood the dangers of it. You just breathe the air, and that's how it's passed. Trump told Woodward, according to the tape of the call. But in his public statements from the podium at the White House briefing room, we all saw it many times, he insisted it was no worse than the flu, it will pass, it will go away on his own. So that dichotomy is something I'm sure Joe Biden, is a Democratic rival, and a lot of other Democrats are going to seize on.
In fact, Joe Biden has seized on those reports.
He had the information. He knew how dangerous it was. Now, while this deadly disease ripped through our nation, he failed to do his job on purpose.
Woodward's new book is titled Rage. Senate Majority Leader Mitch McConnell says Republicans have put together another potential stimulus package. He outlined some of its priorities.
Secures federal unemployment benefits, reopens the PPP for a second draw, sends more than $100 billion to keep kids safe in school, helps parents with child care, helps families afford expenses or homeschooling.
But the bill calls for $500 billion in spending, which is a far cry from the House CARES Act, which called for $3.5 trillion in relief. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar here with you on a Wednesday. Yep, it's Wednesday. I keep checking, and it's true. Interesting.
This is a WOA, I feel like.
What's that?
This is a WOA to some extent.
This is a WOA. Well, and it's interesting, too, because we've seen people sort of circling around JCPenney, bankrupt retailer. We know that the world of retail is under existential threat, to say the least. But we also know that there are some big companies out there, two companies in this case very familiar to you and me. We're talking about Simon Property and Brookfield, that are still essentially long malls or long some version of retail or long some sort of real estate. So they are going to pick JCPenney up out of bankruptcy. About $800 million is going to keep the beleaguered department store chain alive amid the pandemic. This, according to some reporting via the Wall Street Journal.
But I feel like, don't they kind of have to do this? Because if you don't have these anchor stores that continue to bring customers in, the rest of the mall and the property is at risk.
Yeah, and I think the question is going to be, and this is raised in this story, and we've raised it on this program and elsewhere, the question is, do you essentially just sort of like provide a little bit of life support through this and then kind of figure it out, and either retool the brand or essentially, maybe let it go on its way and figure out something to do with those properties because, as you say, they have a literal vested interest in these properties remaining vibrant.
Well, think about when we talked with David Simon, right? Specifically, and how they were working with Macy's. We did that at a Bloomberg Live, the Year Ahead event, and very involved in kind of Macy's strategy and thinking, because the two really kind of go hand in hand. They need each other.
Yeah. I also wonder, this is also a truly American brand in many ways, and can it be resuscitated? We'll see. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are holding at or near session highs. We've got 43 minutes to go ahead of the closing bell. Let's find out what's happening as we head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in rally mode today with the Dow currently up 631 points. S&P is up 84 and NASDAQ climbs by 385. Those FANG stocks up 3.5%. The U.S. 10-year yield at 0.7%. WTI crude futures up 3.4%, and gold rises 17. Among the main 11 S&P sectors, all are trading in the green, led by technology, materials, and consumer discretionary. And leaders to the upside in the Dow, Microsoft, Apple, and Salesforce, while only Walgreens fell. After earnings, Lululemon dropped as much as 10%. Slack fell as much as 17%. And in deal news, LVMH's board says they can't carry out the Tiffany acquisition. Tiffany plunged as much as 11%. And landlords have striked a deal to acquire bankrupt JCPenney. Wrapping things up, some of the names pointing after the bell tonight include BigCommerce, RH, and Zscaler. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg Times Squawk SQUAWK on your terminal. I'm Charlie Pellet. That's the Bloomberg Business Flash.
All right, Charlie, thank you very much. Well, very fair for all of us to say we've had an awful lot on our minds over the past 6 months, plenty to worry about. In the meantime, the climate crisis continues, so we kind of thought you should know what you have missed during the pandemic. And in a few words, there's a story that's among the most read on the Bloomberg. It's a race against heat, and humanity is losing. Sorry for being kind of such a bummer on this Wednesday. Let's get into this, though, with Bloomberg News sustainability editor Eric Roston. He joins us on the phone in Montclair, New Jersey. Eric, good to have you here with us. Despite, trying to deal with the pandemic and dealing with racial inequality, we definitely have had a full plate, but nonetheless, there's a lot of climate science that we've missed that's been going on around us.
There is no shortage of things to think about, whether we're talking about today's news or decadal trends that we see in our climate coverage. And today, in advance of the second ever issue of Bloomberg Green Magazine, our new quarterly, we published two items that may be of interest. The longer one that is performing really well on the terminal and getting a lot of attention is a walk through sort of an aggregation of all of the heat news alone that we've seen in the last 2 weeks. And it's sort of the opposite of news. We've known for decades that rising temperatures would bring discomfort and in some cases much worse. And this beautiful walkthrough done by our colleagues, mostly in Europe, shows what this means both at the global scale down to the micro scale, down to the August 17th reading in Death Valley, which hit 130 degrees.
Yeah, go ahead.
Go ahead. No, I'm just saying there's when you gather all of these streams together, you can see sort of reality filling in the predictions that we've heard about for so long, and it's hard, not to have some kind of reaction to it.
Yeah.
Yeah, and I mean, it's interesting, too, because I think this is now even more top of mind, Eric, as we see these, not just the headlines, but the pictures from California and these wildfires that are raging, and you essentially hear Gavin Newsom, the governor of California, basically saying, look, folks, you want to see climate change? Here you go. This is what it looks like, and it's a stark reminder, once again. I guess my question to you is, are people paying attention, and has this pandemic pushed it out of our minds?
It's a simple question, I think, with a difficult answer. Part of me just thinks immediately about just the media environment we're in and how over the internet has obviously splintered attention, and so there's sort of many smaller news communities than there were when there were just the big networks and the big papers through so most of the post-war era. Other than that, though, there are some things that are obviously very difficult to ignore, and California is one of them. People living there, we're hearing from colleagues and friends and family out there that it's on conditions unlike they've ever seen or experienced, because it's already the worst fire season in California history.
Eric, I wonder, Jason and I talk a lot about ESG and, people doing the right thing, especially when there's money that makes sense to do the right thing, whether it's diversity, whether it's the impact on the environment. And I do wonder, your story, when you talk about the things that we've missed while we've been, obviously all focusing on the pandemic, I mean, there is a cost to a hotter globe. And we're going to see, here we are dealing with deaths from a pandemic, but you're talking about more heat deaths, as one of the costs. And I don't know whether people realize that.
It's I find it useful to sort of retreat off into the big picture.
Yeah.
And our economy, the structure of our markets, and how we create and build businesses. These are all things that occurred at a time, anywhere from 50 to 300 years ago, when we never had to think about the climate. We just never had to think about it because it's been the same, as far as we can tell, for like 10,000 years. Right. But now we're taking those systems that were built in a stable climate and trying to see how well they're going to work when physics is changing the field of play. And we're going to see floated all kinds of measures, from investor practices, like you just mentioned, to, in some countries, different laws and policies. It's a living experiment,
right?
And we're not sure what the next move is.
Yeah, living experiment with very, very serious consequences depending on what choices we make. All right, Eric Roston, thank you so much. Sustainability editor for Bloomberg, joining us on the phone. And you can read more stories on climate news, science, and the environment, including the stories we talked about, at Bloomberg.com/green. Carol, how are you feeling about the chart of the day?
I'm feeling okay.
Yeah.
I'm looking forward to it. I'm a little bummed. I'm going to put this stuff out by Eric on the Bloomberg. Sorry. I'm just sitting with it.
I was trying to get you riled up about the chart of the day.
All right. I'm looking forward to the chart of the day. Maybe it'll be an upbeat song. Maybe it'll be Dancing Queen. Oh, no, they've already done that.
Already did it. Sorry. It's Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we are going to get that chart of the day, the song of the day as well. Carol?
Yes.
I'm really excited.
I am too. Always do. It's kind of a nice part of our day. All right, we'll get to Dave Wilson in just a moment. First up, let's get back to Charlie Pellet with a check on your top business stories and 29 minutes to go, and we've still got a rally, right?
Indeed, holding close to session highs. Stocks are rebounding from a three-day rout. What a difference from this time yesterday. Dip buyers pouring into beaten down tech shares. Dollar fell against versus major peers. S&P climbing more than 2.5%. Tech-heavy NASDAQ 100 jumping more than 3.5% after an 11% rout took it down to the average price over the past 50 days. Tesla also bouncing off that closely watched level after suffering its biggest sell-off. Tesla shares are rebounding today by 9%. So here's where we stand in terms of the equity markets. S&P up 91, up 2.7% now. The Dow's up 680, up 2.5%. NASDAQ is up 365, a gain there of 3.4%. The NASDAQ 100 index up 3.7%. 10-year, the yield there 0.69%. Gold up 0.9%, 19.50 the ounce. And West Texas Intermediate crude up 3.5%, 38.06 for a barrel of West Texas Intermediate crude. American Airlines Group is studying whether to seek a larger loan from the Treasury as the company looks to shore up its balance sheet to withstand the coronavirus pandemic. Chief Financial Officer Derek Kerr says the airline is also in talks to delay the delivery of 18 Boeing 737 MAX jets. His comments came at a Cowen and Company conference. Among some of the airline names today, American down 3.6%, UAL down 3%, Delta down 2.1%, Southwest lower by 2.4%. 3:33 on Wall Street. Time now for the Small Business Report. Here's John Tucker.
Well, Charles Dickens probably didn't have chicken fingers in mind when he wrote Tale of Two Cities. But Sticky's Finger Joint is finding that location matters a lot for its small chain of restaurants in New Jersey and New York. Owner John Sherman first spoke to us near the height of the pandemic back in May. John, what's the update with your small business?
You know, we have 3 locations in New Jersey, and those have actually been performing incredibly well. We're actually doing higher sales now than we were in February before the pandemic started. You know, when New Jersey as a state kind of lifted their curfew restrictions, you know, we saw a big rebound in those restaurants, and they've been performing really well. Now, New York is still a bit of a different story. 10 of our 13 locations are in New York, so our largest leases and rent expenses live in New York City, not surprisingly. And so, you know, we have certainly seen some growth since May, since we last spoke, but it's kind of been a slow and steady upward trend.
You're one of the few small business owners I've talked to who's actually opening up another location. Tell us about that.
We were originally planning to open the store April 1st, and, you know, we've had a really positive and productive conversations with our landlord there, and, you know, they wanted us to open. We had the ability to get open, and so we're kind of just going for it.
That's near Penn Station. John Sherman, owner of Sticky's Finger Joint in New York and New Jersey. Thanks and best of luck. And that is your Bloomberg Small Business Report.
And we thank you very much, John Tucker. Our gains are sticky with the S&P up now by 89, up by 2.7%. I'm Charlie Pellet. That's your Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio. There you go.
Okay, so, all right. I hope Alex is listening, because I wonder, do you think she would get this one?
Yes.
Okay. I'm going to maybe message her if she would.
Well, but how would you message her? She's going to say, yes, I would get We Are the Champions.
No, she would be honest. That's kind of how she rolls.
I'm gonna find her later and play it on my phone and say, it's the chart of the day.
Okay.
She's going to say, is that from Mamma Mia?
All right, it's Queen.
We Are the Champions.
I have to say, I just would remember our basketball team like warming up, and they would, of course, play that, right?
Absolutely.
There was a little cheerleader on the side.
Oh, I thought you meant when you were hooping. No?
No, I wasn't hooping. I was doing backflips and things like that, but not hooping.
Well, quick flex. In any case, Dave Wilson, we are the champions, my friends. What's going on?
Dave was like, whatever you two finish up.
Yeah, exactly. Talk amongst yourselves. You've got the topic. You don't need me for this part. Other than
We
to
always
say,
need
you. We're talking about the champion stocks in a sense. And actually, Jonathan Golub, who's the chief U.S. equity strategist at Credit Suisse, kind of ran a bunch of numbers which kind of bear out the point you were making yesterday when we talked about the chart, Carol. And, when it comes to the best performing companies this year, I mean, it's not just a matter of them being what Golub called speculative darlings in a report, that there's something behind the gains. So what he did is he went through the S&P 500, the S&P Mid-Cap 400, and the Russell 1000, and if a stock was in at least one of those indexes, he included it in his analysis. So we're talking about something like 1,100 companies that were represented, and then he broke them down by stock performance this year. It was as of last week. So, there's a group that more than doubled this year to the worst group, which had losses of more than 25% for the year. And then from there, he kind of looked at the median for each group. So you're taking, you say you got 100 stocks, you take, somewhere between 50 and 51, and that tells you sort of the median for the group. And what the chart shows is what he came up with in terms of earnings growth and sales growth. Check this out. For the group of stocks that was up more than 100% this year, the median increase in earnings was 51%. The median growth in sales was 32%.
Wow.
And if you go all the way down to the bottom group, you had basically nothing at all. Profits up just 0.2%, sales down 0.5%. And you can kind of go up, from the bottom all the way to the top, and you see sort of this incremental improvement in their fundamentals, as you say. So it really kind of bears out the point that, what we've been seeing hasn't come from nowhere. I should say, though, when you look at that top group, the average price-earnings ratio, looking at the median again, was up more than 15 points, while it was down more than 2 points for the worst performers.
So basically, Dave, the stocks that have really run up are justified by their earnings and sales growth in many ways.
At least you may not be able to justify the extent of the gains, but at least the fact that they are the best performers, you can justify by the fundamentals, so to speak. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I haven't heard from Alex yet.
Yeah. All right. Stay tuned. We'll bring you that as soon as it crosses the Bloomberg red sticky head. Alex Steele knows we are the champions. Not yet. People say. All right, Dave Wilson, we'll talk to you after the close of trading here in the U.S. It's an up day, to be sure.
Yeah.
All right. Let's get down to Washington. In the meantime, check in on those world and national headlines with Nancy Lyons. Hey, Nancy.
Hey, Jason, the White House says President Trump never lied to the public, but there are new tapes from March in which Trump admits to author Bob Woodward that he deliberately minimized the danger of the coronavirus, even though he knew at the time that the pathogen was deadly. Wildfires are raging unchecked across parts of the western U.S. as winds sweep the region. More than 14,000 firefighters are on the lines managing California's fires from the Sierra Nevada to the San Francisco Bay region and then south to San Diego County. Daniel Berlant is a spokesman for CAL FIRE.
We are hitting the record books in just how large these fires are burning and how destructive they are. And we're just now entering the peak of our fire season.
In Washington state, more acres burned in a single day than firefighters usually see in a year. Well, the U.S. Justice Department is seeking to take over Donald Trump's defense in a defamation lawsuit from a woman who had accused him of rape. It would put the American people on the hook for any money she might be awarded. Attorney General William Barr explains why the Justice Department is getting involved.
Officials who are elected and answer press questions while they're in office, even if those questions relate to their personal activity, and could bear upon their personal fitness. is in fact in the course of federal employment.
E. Jean Carroll wants the president to provide a DNA sample and testify under oath. A federal judge will need to determine whether to keep the case in federal court and allow the U.S. to become the defendant. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks, Nance. You are listening to Bloomberg Business Week. Well, some deals are happening, but then again, some deals are not. LVMH saying, yeah, Tiffany, I know we had a deal. I know we were getting together, but not so much.
This is like major bummer. And I take back, go back to the year ahead, the Pursuits.
Yeah.
I was sitting down with the Tiffany CEO.
I remember it well.
Right? Just before
Squirming. I remember the squirming.
Listen, he was such a great, he just was such a good guy because there was so much news rolling around that this deal was going to happen, and he couldn't obviously talk, but he showed up at the event.
Not for lack of trying by you.
I did try. I tried many different ways to ask him about it. But here we go, LVMH. This was going to be the luxury industry's biggest takeover, coming undone. It was a $16 billion deal to buy Tiffany. And then Tiffany has said, okay, we've got a lawsuit because they want to keep the deal on track.
Right.
It's just, a reminder that the COVID-19 pandemic has definitely changed our world, and especially for those who are maybe pursuing a big deal just ahead of it.
Well, and it's interesting because LVMH, of course, the owner of Louis Vuitton, that's the LV, said that the French government requested it delay the deal for reasons related to U.S.-France trade. Tiffany's basically like, no, you're making that up. Like, you're using that as cover because you think you should get a lower price. You think you should pay more. You, LVMH, think you should pay less, I should say, for Tiffany because the market has changed dramatically. And, this is such an interesting element of the back and forth around M&A. When Stefan Seelig is on with us next, I want to ask him about this because I remember he was working on huge deals in the last boom. And, there's this thing called the Material Adverse Clause, the MAC, in merger agreements that basically say, look, if the world changes dramatically, you can essentially pull that clause and say, listen, the world's changed too much. We need to recut the deal.
Right. I mean, and listen, the world has changed dramatically.
Yeah.
Although, who's to say Tiffany, one of the best known brands out there, we'll see.
Yeah, I mean, I don't know what's going to happen. I mean, obviously, Tiffany shareholders who were betting on a deal, they have sold off in a pretty dramatic way today. So we'll certainly keep an eye on that because you also know, and you know this well, that the M&A world tends to kind of play off of the momentum, especially within sectors. And so if deals are getting called off, you do wonder what else may be in jeopardy, especially in the luxury world.
Or whether it's just a negotiating tactic to get a better deal. I mean, listen, LVMH chairman Bernard Arnault, this is a guy who has done a ton of acquisitions, has really built out that empire, and this was going to be, part of that build out, a big move in terms of really building it up. And so whether it's just a negotiating tactic to say, listen, the world has changed and the outlook is a little uncertain and we don't know exactly when things will change. And so let's talk about redoing the terms. But they have extended, the deadline for getting this deal done. So it makes me, I kind of want to be a fly on the wall and wonder what were some of the conversations that have been going on back and forth here.
Well, and here's one of the reasons that they're pausing. So Tiffany's global net sales fell 29% in the quarter ended at the end of July. But that was better than the previous period where it dropped 45%. So if you're looking at a subdued long-term market for luxury, you're not buying what you thought you were.
But take me back to the financial crisis, because weren't there some deals, I'm just trying to think, that still had to go through that the government put pressure to say, not just, buying out other banks, but I thought there was, I'm just trying to remember that there were some things, you were buying at the top of the market and you still had the government put pressure to do it.
Yeah.
I don't know.
I mean, it wasn't, I'm not sure there was as much government involvement as there were basically the courts coming in and saying a deal's a deal. And despite the fact that the world has changed a bit, we definitely, you got to go through with it.
All I'm going to say is, yeah, exactly. I mean, and it's interesting, this story that's on the Bloomberg just talks about some of the back and forth. And also, Arnault went to Texas a month before LVMH and Tiffany struck their deal and met up with President Trump. There was a ribbon-cutting ceremony for a new Louis Vuitton factory in Texas. And so this was a move by Arnault to kind of ease some of the trade tensions between the countries. And so you do wonder how this kind of impacts maybe his longer term strategy. And I'll go back to Tiffany is one of the best known brands globally when it comes to luxury. And they've also been going through some transitions to go after a younger consumer, to go after men more. They're building new headquarters, or redoing actually their iconic headquarters, I should say, in New York City, because right now they're in temporary, headquarters right now in New York, just around the corner. So I don't know, but you're right. I don't know. We'll see what happens.
Yeah, I mean, it also is interesting to think about kind of the retail environment in the context of the stock market environment, and just taking a quick look at where we are on the markets right now. The Dow, the S&P, the Nasdaq, all up better than 2%. The Nasdaq, coming back, and it has been it's down currently about 6.6% over the past 5 days. It's up 2.8% today. It has been outpacing on both sides of the ledger. But let's also keep in mind, and you said this at the top of the show when we talked about Gina Martin Adams yesterday, this is a stock market that has run up. The Nasdaq is still up 38% for the year.
That's amazing.
It's amazing. I mean, all the major indices are up. The Dow's up.
Yeah.
Is that? Oh, sorry. That's over 1 year.
That's over 12 months.
Yeah, that's over 12 months. Year to date, 24%. Sorry, the Nasdaq, the S&P up 5%. Dow Jones is now down for the year, but just barely.
The only thing I will say, I mean, and I like the technicals and I like to look at some of the charts. I mean, you get to a point where a market is overbought, and it can stay overbought for a while. Before there's some kind of correction. But I feel like the last decade, we've seen this a lot, where the market runs up, the equity market runs up for a while, might stay there for a while, and then we get some kind of technical 10% correction, and then it resumes its move to the upside. And I think a lot of it is contingent on what the environment, the market and the economic environment ultimately are like, as we get into 2021.
Right. All right, let's head over to Charlie Pellet now. He's got an update on that trade as well as the latest headlines. Hey, Charlie.
Well, hello there, Jason Kelly. Indeed, 12 minutes to go ahead of the closing bell here with the Dow, the S&P, NASDAQ off session highs, but higher across the board right here. Let's begin with the S&P up 73, up 2.2%. The Dow up 525, up 1.9%. NASDAQ rallying almost 300 points today, rebounding from yesterday's sell-off. NASDAQ up now by 296. That is a gain of 2.7%. 10 years down 5/30 seconds. The yield 0.69%. Gold up 0.8%, 1948. Big move for crude. West Texas Intermediate up 3.5%, 38.03 a barrel. Brent holding above 40, back above 40, 40.72 barrel of Brent up by 2.4%. Recapping a Wednesday rally with the S&P up 73, up 2.2%. I'm Charlie Pellet. That's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
And it is time for the drive to close. Just want to let you know we are keeping an eye on what's going on down in Washington. The president speaking at the White House, talking about some potential judicial nominees. He had said earlier in the day that he was going to give some names of potential Supreme Court nominees should there be a vacancy, and presumably should there be a vacancy if he won re-election as well. So we'll keep an eye on that. Obviously a lot going on in Washington, and we will take you there if the news warrants. In the meantime, Carol, let's get to that close. Let's get to the drive to the close.
Let's do it. Let's bring in Hank Smith. He is head of investment strategy at Haverford Trust. They've got roughly $9.3 billion
in assets under management, based in Radnor, Pennsylvania, and that's where we find Hank on the phone on this Wednesday. Hank, nice to check in with you again. I am curious, after the selling that we saw for 3 days and now the bounce back, were you among those buying or advising your clients to buy in today's market ahead of the move up?
Carol, nice to be with you, and good afternoon to you and Jason. We have been very consistent throughout this, what is it now, 5-month bull market, that sell-offs are buying opportunities, and that includes the previous 3-day sell-off that we had. And it's really quite simple. This bull market is being powered by some very, very strong tailwinds, the biggest being monetary stimulus, the greatest amount we've ever seen, fiscal stimulus, the greatest amount we've ever seen, a dramatically recovering economy off of the worst quarterly economic data. And then finally, we are truly in a TINA environment, meaning there is no alternative. We were in a TINA environment back in 2012-13 when the 10-year was, 2 3/4%. Well, 10-year now is 0.75%. So we are really in a TINA environment. And it doesn't mean we won't have headwinds. We certainly will. That will create volatility. But the tailwinds I just described are not going away. So these sell-offs, which are probably overdue, are great entry points for investors.
So, Hank, I want to talk to you a little bit about the retail space, because we were talking earlier on in this show about JCPenney apparently doing a deal, this according to both Dow Jones and now Bloomberg, with its lenders and landlords, in this case Brookfield and Simon, to basically keep JCPenney alive. Keeping something alive versus thriving are two very different things, and it feels like we've seen both in the midst of this pandemic, and I wonder, as an investor, what you make of that and how you sort of delineate here.
Yeah, I think that's the downside of having these super low interest rates for a super low period of time, that investors can get away with raising money to keep a company alive that really should be dead. And in the real retail space, it's never been more clear. You have the haves and the have-nots, and the have-nots are just dying off. And, JCPenney is one. There have been several other bankruptcies. And the haves are also very clear. Obviously Amazon, but Walmart, Target, Home Depot, Lowe's, TJ Maxx. These are companies that are just taking advantage of this environment. But look, this retail story was true going into the pandemic. The pandemic has just accelerated it.
Well, what's interesting is it's not just JCPenney taking advantage, right? It's you've got, big mall operators, Simon Properties and others, saying we've got to keep this alive because that impacts us in a big way.
Right, but ultimately it is the buyer that keeps something alive or causes something to die. And the store traffic in JCPenney's, Macy's, other mall anchors, it just has not been there compared to the retailers that I mentioned beforehand.
All right, Hank, we're going to leave it there. We need to get down to Washington. Hank Smith, Head of Investment Strategy for Haverford Trust Company, joining us on the phone from Pennsylvania. Let's head down to the White House now, where President Trump is taking questions.
We don't want to instill panic. We don't want to jump up and down and start shouting that we have a problem that is a tremendous problem, scare everybody. And I'll tell you the other thing, we immediately started buying all over the world. We started buying masks and gowns and everything else, and we don't want to cause pricing to go up to a level that becomes almost unaffordable. So, yeah, in that sense, I agree with it. Yeah, please.
How do you reassure the American public going forward that they can trust what you're saying?
Well, I think that's really a big part of trust. We have to have leadership. We have to show leadership. And the last thing you want to do is create a panic in the country. This was a horrible thing. It was sent to us by China. Should not have happened, should never have happened. This is a disgusting, terrible situation that was foisted upon us. And we have to show, we just don't want to use, the best word is panic. We don't want to have to show panic. We're not going to show panic. And that's exactly what I did. And I was very open, whether it's to Woodward or anybody else. It's just another political hit job. But whether it was Woodward or anybody else, you cannot show a sense of panic, or you're going to have bigger problems than you ever had before. Please.
Respectfully, sir, your comments amounted to more than trying to reduce panic. So on February 7th, you told Woodward it's more deadly than your strenuous flu. But
go ahead, please.
Mr. President, don't you think if you were more forthright with the American people, more lives could have been saved? Do you take responsibility at all for some of the 200,000 deaths that we've had?
So I think if we didn't do what we did, we would have had millions of people die. We closed up our country. We closed it up very, very quickly, very effectively. We did a job. We learned about this horrible disease, along with the rest of the world, which had to learn about it. And then we opened it up, and now we know the vulnerable. We know who it attacks, who it's so vicious against. And I think we've done, from every standpoint, a incredible job. We shouldn't have lost anybody. Nobody should have lost. China released something that they shouldn't have been allowed to they should not have released. It came out of China. It went to Europe. It went all over the world. Should have never happened. They could have stopped it. They stopped it from going into the remainder of China. It started in Wuhan, and they stopped it. But they didn't stop it from coming to our country. Now, we had to show calm. We had to show, if it was up to you or whoever, I have no idea what he said in the book. And again, it's a book that I gave him some quotes, and frankly, we'll see how the book turned out. I have no idea. You're asking me questions for the first time. But again, the last thing we can show is panic or excitement or fear or anything else. We had to take care of the situation we were given. Now, long before anybody else wanted to do it, I closed our borders to a very heavily infected China. If I didn't do that, we would have had hundreds of thousands more people die. Dr. Fauci said it. Many people said it. It was a great decision. It was a decision I made, and I had to make. It was a decision that a lot of people thought I was wrong. Nancy Pelosi said I was wrong. Joe Biden said I was wrong. They all came back, and they said it was the right decision, and I was way early. That was in January, the end of January I did that. So that was a very good thing we did. Otherwise, we would have had hundreds of thousands more. But if we didn't close the country, we would have been talking about millions of people instead of the numbers that we have right now.
You mentioned that you were trying to avoid price gouging, but you mentioned to Bob Woodward that you recognize that this virus spread through the air on February 7th. You didn't begin Project Airbridge until March. You didn't use the Defense Production Act until March. You didn't start ramping up ventilator production until March.
You didn't really think it was going to be to the point where it was. All of a sudden, the world was infected. The entire world was infected. Everyone was scrambling around looking where to buy face masks and all of the other things. We've opened up factories. We've had tremendous success with face masks and with shields and with the ventilators. We're now supplying the rest of the world. We have all the ventilators we can use. And remember this, the ventilators were very important. Not one person that needed a ventilator didn't get it. And these are very complex, expensive machines to make. We opened up something like hadn't been done since the Second World War. We've done an incredible job, but we don't want to run around screaming, shouting, oh, look at this, look at this. We have to show leadership. And leadership is all about confidence. And confidence is confidence in our country. And our people have been great. We've been put through a lot by China, by releasing this, by having this come here. We were put through a lot. They could have done something about it, and they chose not to. I am very honored to have presented to you today a list of 20 incredible people, and we will talk later. I'm sure we'll be meeting later in the day. Thank you very much.
You were briefed on the threat in January, late January. You knew how...
All right, you've been listening to President Trump there at the White House answering questions a lot about those comments that have been revealed in a tape in an interview that journalist and author Bob Woodward did with the president, having to do with the pandemic, specifically asking questions about the president's take on that, and of course the White House press corps asking the president a little bit more about what he knew, what his perspective was, especially in those early days, Jason. And I think that was a time where there was a lot of mixed messaging coming from the administration about how severe this virus was and the potential for impact here on the United States. And certainly as it was unfolding, and we know how it has played out, that it was the U.S., of course, I think has the highest death count when it comes to the pandemic globally. So very interesting. So we thought it was going to be a lot more about Supreme Court potential nominees.
And he did reveal that list. We'll talk a little bit more about that on the other side of this hour, later on in this hour. In the meantime, the market has closed. Let's get an update from Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Jason Kelly. Market did indeed close higher today with the S&P 500 index advancing 67 points off session highs, but a gain of 2%. The Dow up 439, up 1.6%. NASDAQ up 293, close to session highs, rallying today by 2.71%. 10-year down 430 seconds, looking at a yield of 0.69%. Gold up 0.9%, 1948 the ounce. And West Texas Intermediate crude up 3.4%. $38 a barrel today on WTI. Brent closing above 40 at 40.69, up by just about 2.3%. So an update on Wall Street, given several days of losses. What about the market backdrop? Omar Aguilar is Chief Investment Officer for Equities at Charles Schwab Investment Management.
What we are observing right here, you put it into the context of the size of the rally that we have seen since April, we're just seeing volatility. The size of the correction, even though in the NASDAQ has significant, is still very small relative to the size of the bull market we saw earlier in the year.
He was interviewed this morning on Bloomberg Surveillance. The luxury industry's biggest takeover has collapsed into acrimony, with LVMH moving to call off a $16 billion purchase of Tiffany, which countered with a lawsuit to try to keep the deal on track. Today we saw Tiffany shares tumble by 6.4%. Some of the other big movers that we saw today did include shares of Tesla. Tesla rallying today, sharp contrast to yesterday's selling. Tesla shares did advance today by 10.9%. Again, recapping here, S&P up 67, a gain of 2%. The Dow up 1.6%. NASDAQ up 2.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So the market, of course, closing, Charlie giving you the rundown of the numbers, and definitely a different tone from what we've seen over the last 3 trading days. If I look at the S&P 500, Jason, certainly a much more bullish tone. 398 names in the index, higher today, 103 lower, 4 unchanged. And if I break it down according to those major industry groups in the S&P 500, there are 11 of them. You see a broad-based rally. Top of the pack, information technology. So those names that have consistently pushed the overall equity market in the U.S. higher continue to do so today.
Yeah.
That group was up about 3.4%. Materials up 2.6%. Consumer discretionary up 2.3%. Bottom of the pack, energy, but still with a gain of about 2/3%. So, yeah, this was definitely a risk-on trade today. And probably, as we said, buy the dip. We heard Hank Smith talking about it. That's been their strategy over the last couple of months and throughout the bull market, that when the market pulls back, it's an opportunity for investors to get in
just get
at
on
cheaper
in
prices, right?
Yeah, I mean, and if you look at some individual names, looking at information technology, semiconductor names all over the place. NVIDIA down for 3 straight days, was down 9%, 3%, and then 5.6% yesterday. It's your biggest gainer in the SP, your second biggest gainer, excuse me. It is up 6.7%. It has been a darling of the entire market, certainly the tech world. That's a stock that has more than doubled and is now the world's largest chip maker.
On the flip side, number one decliner in the S&P 500 is Tiffany. We talked about it earlier. It's certainly been one of our big corporate and business stories today. Stock was down more than 11% at its lows, finishing the day, though, down about 6.5%. And, of course, the story is LVMH backing away from Tiffany and buying Tiffany. And it's an interesting story. As you said, you were really wonderful, Jason, talking about kind of the M&A environment. This story has a little bit of a twist with the French government as part of maybe why LVMH is backing out. I feel like tick, 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 tick. Let's wait and see whether or not they come in and say, you know what, we are still interested. We just want a lower price, and maybe this is part of the negotiating. We'll
Come
see.
back to the table. Have some cheese. Let's have a glass of wine.
Have an
Let's
Elsa
work this
Peretti
out.
bracelet.
Yeah, exactly. How about some Dom Perignon? Can I get you some? Because we've got some right here. We can work this out.
I have a
can't
diamond
we?
that you might be interested in.
Exactly. I've got this nice little blue box. It's got a new price in it. We'll see. I mean, it has certainly been one of the most watched transactions on hold for now, but we'll see. Investors in Lululemon not happy today. A cautious outlook. They basically were like, listen, we don't know what's going to happen next. Even though they had a great quarter, they were really punished in the market today. And I do wonder, we've talked about this on this program before, you know, when a company refuses to give guidance, especially at this point, I get it in May, June, you don't really know what's going to happen in the world. And listen, we don't know what's going to happen in the world still, but if you're performing as well as Lulu is, like, make a guess.
Right.
Tell us what you think.
Come on. And the thing I want to go back to is you are running a company.
Right.
You have to make decisions. You don't have a choice. You can't just kind of say to your whole, team,
we'll see.
I don't know.
Yeah,
I
exactly.
don't know what's going to happen. You've got to make decisions. Let's point out that Lulu, heading into today's session, we got their earnings after the close yesterday. Stock was up about 51%.
Yeah.
So,
It's a retail have, as
Yeah.
Hank Smith would say. Yeah, that's for sure.
Exactly.
All right, let's take a quick look at volatility. The VIX down about 7.4%, closing below 30 at 29.14. It's Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson, Dave Wilson back with us with your stock of the day. Easy for me to say. What you got?
Right. Coupa Software, Jason. It's a company that makes programs designed to help businesses control costs. The software can handle product sourcing and procurement, invoices, travel and expense management, digital payments, and financing. Coupa Software was founded in 2006 and went public in 2016. The ticker is the first four letters of its first name. That's COUP. The shares more than doubled 2 years ago, and again last year, and this year they surged as much as 141% through last Wednesday. Coupa Software then faltered as technology stocks slumped. While the group rebounded today, the company was left behind as its fiscal third quarter earnings forecast was disappointing. Late yesterday, Coupa Software said adjusted profit for the quarter would be 3 cents a share at best. Analysts expected 5 cents a share on average, according to a Bloomberg survey. The shortfall occurred even though the company's revenue forecast beat projections. Now, Coupa Software shares fell for a fifth day, matching this year's longest string of declines. Over that period, they've dropped more than 24%. That's the biggest 5-day drop for the stock ever. Today's decline amounted to 5.9%.
All right, interesting name there.
Right.
Yeah, especially in an environment where investors were willing to take on more risk. So, they obviously didn't see maybe a buying opportunity.
Yeah, exactly.
Yeah, it was down about 6%. Given the backdrop, you have to wonder if it were like even yesterday, how much the stock would have been down.
That's a good point, right? That there was a little bit of a ceiling. Stock's up 78% this year, too. I mean, again, it's like, man, some of the runs that these names
But like
have
I
had.
said, it was 141% just a week ago.
Yeah, wow. That's pretty.
Brutal. All right, Dave Wilson, thank you so much. We will catch up with you tomorrow for your insights, your chart, and your stock. Coming up, we are going to check in with the dean of a major business school.
Yeah, I'm looking forward to this. And she points out how they have been dealing with two pandemics, the health crisis, and of course the inequalities and racial justice, the problems that we have seen and that have been laid bare again over and over for us. All right, let's get to World and National News headlines. For that, we turn things over to Ed Baxter in San Francisco. Hi, Ed, how are you?
Hi, Carol. I'm okay. Looking through orange skies, still not much sunshine. Really interesting here. We'll get there later. Blockbuster story, the release today of the audio. President Trump telling journalist Bob Woodward on February 7th that he knew COVID-19 was airborne and was deadly. This even a month before he was saying publicly that it was like the flu and would go away. Woodward has supplied parts of the audio to CNN.
This is more deadly. This is 5 per, this is 5% versus 1% and less than 1%, so this is deadly stuff.
Again, that was February 7th. Now, Joe Biden on the campaign trail says the time lag cost thousands of
It
lives.
was a life and death betrayal of the American people. Experts say that if he had acted just 1 week sooner, 36,000 people would have been saved. If he acted 2 weeks sooner, back in March, 54,000 lives would have been spared in March and April alone.
Now, time frame, Biden was talking about March. The tape shows the president knew early February. Now, the president just minutes ago, as we carried here on Bloomberg Radio, said the reason was panic prevention.
I don't want people to be frightened. I don't want to create panic, as you say. And certainly I'm not going to drive this country or the world into a frenzy. We want to show confidence. We want to show strength. We want to show strength as a nation.
Now, earlier in the day, his spokeswoman, Kayleigh McEnany, says it was protect markets.
The markets, also the economy was in play here. We didn't want there to be a huge crash and panic.
In San Francisco, I'm Ed Baxter.
Ed, thanks so much. You are listening to Bloomberg Business Week. So all eyes are always on Apple in many ways, Carol, and we know that there's a big event next Tuesday. We may see the 5G iPhone. Are you going to get a new iPhone?
Kind of the whole family is.
Yeah, wow.
It's time. Well,
Hello.
I know, could change.
Merry Christmas.
Sorry, there'll be no mortgage payment this month.
Exactly. Sorry, Scout. Enjoy that cut rate food.
Exactly. No name food. No, you know what? We actually don't replace our phones a lot compared to, I think, some other folks. And really kind of wait for substantial.
Get it out there. Listen, no shade. Get yourself a new phone. Treat yourself.
Listen, we wait for a substantial upgrade because but
well, this is a big one.
We're an Apple family, and we've kind of been waiting for this, to be quite honest with you. So, okay.
I really didn't mean to call you out like that, but
I know,
meantime,
but I have to say, these are expensive phones, and it's like
they ain't cheap.
I think of my dad
the
or my
insurance.
parents or my grandparents. They're like, you're buying another new phone. Like, we had a phone in the house that we didn't upgrade for decades. You know what I mean? It's
like a rotary phone.
Yeah, it was a rotary. We even had a party line for a long time.
Exactly. Big long cord so you could go into the other room. It's like, I am on long distance.
Well, exactly. The whole house would like shut up when my dad was on long distance.
Somebody's calling for Carol.
Exactly.
It's a boy.
I couldn't. We would like pull the phone into another. Into like our utility room. Okay. So anyway, the story that we want to do with Apple. Now we've got to rush through it. But Apple has apparently developed masks that the company's beginning to distribute to corporate retail employees to limit the spread of COVID-19.
Yeah, I like this. I mean, me too. Listen, we need the most innovative companies figuring this out. I mean, I remember back in the early pandemic, you and I were like sort of buying masks online and with this idea. And I remember people being like, you're buying masks? It's like, we're going to be wearing masks for a while. And guess what? We're wearing masks for a while.
There's something on our mantle plate. Like, it's just everybody's masks.
Yeah.
Little basket there.
We have notes all over the place. Wear a mask. It's Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Dip buyers jump in. Stocks rebound from a three-day rout. S&P 500 index did advance today. We saw the S&P 500 index climbing today by just about 67 points. That was a gain of 2%. Dow Industrials up 439, higher by 1.6%. NASDAQ up 293, higher today by 2.7%. So again, a move higher for the Dow, the S&P, and the NASDAQ Composite Index. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Well, we'd like to welcome our Bloomberg television audience as well into a conversation we're always excited to have because we love business schools here on Bloomberg Business Week. We do an annual ranking. We dive deep into the business of the business schools, and it's a little bit different these days. That is for sure. Ritu Agrawal is the interim dean at the Robert H. Smith School of Business at the University of Maryland, also the founding director for the school's Center for Health Information and Decision Systems. Joining us on the phone from College Park, Dean Agrawal, really nice to have you with us. We know it is an incredibly busy and a very different time in the education of business students. Take us inside. What's school like right now?
I don't even know where to begin, Jason. This has been such a wild ride for the past 6 months, and there are so many different things that I can talk about, but I do want to sort of take you through the arc of our experience. Let me start by sort of directly addressing your question. What's it like inside the business school today? Density is low, but students are masked and they have fake smiles on their faces from what I can tell from behind their masks. They are just so glad to be back.
Well, talk to us a little bit too, Dean Agrawal, about the adjustments that you guys have had to make in order to get students back on campus.
So let me just talk about, sort of two pandemics that we've dealt with in the last 6 months, right? The first one is, of course, the public health crisis that is front and center in everybody's mind. But there's also a second, more subtle one that revealed itself at the end of May, and that's, the national spotlight on the racial injustice and systemic bias. So we've had to make adjustments to address both of these pandemics. So I'll start by focusing on the first, which has, of course, captured everybody's attention, time, and energy for 6 months now. I want your listeners to remember two words: unprecedented and pivot, because that has really described our experience so far. So on March 11th, we all received an email and a text on our cell phones telling us to go home because the governor had just imposed a stay-at-home order. And literally overnight, the campus emptied out. Both campus and the city of College Park became ghost towns. And luckily, we were scheduled to go on spring break the following week, and we delayed the start of classes by another week. And that allowed us to make the first crucial pivot. On a dime, we took 500 courses and we moved them all to online delivery. And let me just say, Carol, anybody who's taught can appreciate the complexity of taking what was designed as a face-to-face course and moving it online in a matter of a couple of weeks. It's not just simply getting onto a Zoom meeting and giving a lecture. There are so many nuances related to teaching. There are so many different adjustments and pivots you have to make. So we did that. That was fall, and then the entire summer was spent in, I want to say, hundreds, if not thousands of hours of meetings, trying to figure out what should be our strategy in the face of a pandemic that nobody can predict, in the face of a virus that's totally unpredictable, that's moving in whatever direction it wants to, in the face of shifting public health guidance on how institutions should be moving. So that's what our summer looked like.
And when you think about, Dean Agrawal, the students, the interaction among students, the whole notion of a business education is an extremely collaborative one. And granted, we're all adjusting to that, and we all are adjusting to working on Zoom. And Carol and I only see each other over video conference at this point, literally. But what's missing, and how do you make up for it if even some of that interaction has to be virtual?
That's a great question, Jason, and one that we've grappled with. We have an Office of Transformational Learning that has pedagogical experts who can allow us to recreate, if you will, not 100%, but pretty close to that, of that rich face-to-face interaction that you might have in an online setting. So we tried to do that in as many of our classes as possible. But I do want to make one more point. One of the controversial decisions we made over the summer, and for exactly the reasons that you outlined, Jason, is we decided we're going to come back in fall and have a hybrid, quasi-in-person, quasi-online experience. Because we want our students to have that rich interaction, especially in the business setting when you're talking about case studies and you're talking about all the things that go on in organizations where understanding people, trust, relationships are such an important part of your education. So, yep, we are back now in hybrid form. And as I said in my fall 2020 communication a couple of weeks back to faculty and staff, summer flew by.
Well, and Dean Agarwal, we've got about a minute, and then we're going to come back and continue this conversation on radio. But I do want to ask you in just about a minute, were there financial pressures to also get the school opening again?
I don't think we made the decision to open the school based on financial pressures. We made the decision based on the very strong message we got from students. We want to be back. Yeah. I had numerous town halls with students all through the summer, and in every one of them, they said, if the right health and safety precautions are in place, we value the campus experience. We value interacting with our professors, with our peers, and, we learn so much outside of the classroom as we do in the classroom.
Right.
So, we've canceled. Yeah.
Dean Agarwal, hold on a second. We're going to do some news, and then we're going to come back and continue the conversation because we have lots more to ask you. We are talking with Dean Agarwal of the Robert H. Smith School of Business at the University of Maryland. We do want to remind everyone, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is next. Do you want to mention also some headlines, Jason?
Yeah, a big headline. Barclays exploring moving its U.S. headquarters to Hudson Yards here in New York City from Midtown. That's a big deal and a big get. Got KKR and BlackRock already headed over there, so we'll keep an eye on that story. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we're going to continue our conversation with the Dean of University of Maryland's Business School. A lot to talk about. I feel like I want to shift to the other pandemic to some extent, Carol, and talk about diversity and inclusion and racial justice, because the next generation of business leaders, it's on them.
Yeah, absolutely. And lots to talk about. And I feel like her leadership has got to be being tested in a big way because of these dual crises. All right, let's get back to your top business stories, some of the news after the closing bell. Here is once again Charlie Pellet.
Hi, thank you very much, Carol Master. I want to begin with a story that you guys mentioned moments ago, and that is sources tell Bloomberg Barclays is interested in taking office space at Hudson Yards, looking west to replace their American headquarters in Times Square. Those sources say the London-based bank is seeking roughly 500,000 square feet of space. Barclays' current U.S. headquarters is at the former Lehman Brothers building in Times Square. Barclays, of course, acquired that property as part of their deal to buy part of the investment bank's U.S. operations back in 2008. Turned out to be an up day on Wall Street today. Yes, closed off our session highs, but green on the screen nonetheless. Sharp contrast to yesterday's decline. Stocks rebounded from a three-day rout as dip buyers poured into beaten down tech shares to send the NASDAQ 100 to its best day since April. Let's begin with the NASDAQ 100 index up 3% today. NASDAQ Composite Index up today by 2.7%, higher by 293 points. S&P up 67, a gain there of 2%. The Dow up 439, up by 1.6%. 10-year down 6/30 seconds with a yield of 0.69%. Gold up 0.8%, 19.47 the ounce. And West Texas Intermediate crude up 2.6%, 37.72 a barrel. Again, recapping, equities higher, S&P up 67, higher by 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie, thank you so much. We want to continue our conversation with Rita Agarwal. She is Interim Dean of Robert H. Smith School of Business at the University of Maryland. Ritu is a distinguished professor, Dean's Chair of Information Systems. She's also founding director of the School Center for Health Information, and Decision Systems. She's on the phone from College Park, Maryland. Sorry, I'm rushing to get to you because Dean Agarwal, your research is on the use of information technology in healthcare and health analytics, AI applications in health. I do want to ask you before we shift to the other pandemic is what do you think will be the lasting impact on our healthcare world as a result of the pandemic?
Well, we have been talking about digital transformation of healthcare for almost 2 decades now. But this has been an industry that's been slow to adapt, as you all know, in contrast to, let's say, retail or financial services or any one of those industries. I think this is the inflection point after this pandemic where so much of the healthcare that we're consuming is happening through digital channels. We are almost certainly going to see greater incorporation of data analytics and technology into healthcare. And I think that's a good thing in the long run.
So let's talk about this other pandemic and this reckoning that we're having as a nation and certainly as business leaders around the notion of racial injustice and diversity, especially in companies. How do you train? What's the most effective thing you can do with this next crop of leaders, Dean Agarwal, to ensure that they are in a position to take this on successfully?
Yeah, let me just start by saying that this has just been such a heartbreaking time for all of us and a time of great anguish and outrage in our community. So for the past several months, we've been dealing with the second pandemic, and we have a very robust set of diversity, equity, and inclusion initiatives that we've put in place over several years. But in the last 3 months, we've really accelerated the scale, the scope of our activities just in response to everything that's happening around us. And you are so right, Jason. We would be remiss if we were not training the next generation of leaders to really take this bull by the horns and address this dilemma even before they get into the workplace. So let me share with you some of the things that we've done. I think one of the most remarkable things that happened is that our students stepped forward, and one of our underrepresented students from the undergraduate program, brilliant young man, he produced a video all by himself with help from a Black entrepreneur to spark conversations around diversity, equity, and inclusion. And, you know, if you have time on your schedule, sometimes you should view that video. I shared it with colleagues amongst the Big Ten deans and everywhere else, and just incredible kudos for it. But the bottom line of this video is that it prompts everybody with a series of very provocative questions, and then it ends by saying, and what will you do? So we show it, we have shown it to all of our incoming students across all of our programs, undergraduate, master's, MBA, and we're using that as a way to spark conversations. There's a whole host of other activities that we have planned. We just recently revised our mission and our values and our strategic pillars to explicitly call out diversity, equity, and inclusion as a fifth strategic pillar. So we are so strongly committed. We are changing our curriculum to include more discussion of DEI, even in our regular business school classes. And let me just say one more thing. We've started a case collection, if you will, cases that feature diverse protagonists, so our students get exposed to leaders from all colors, races, genders, ethnicities, etc.
Well, and, you know, we've just got about a minute left, Dean Agarwal, and I do wonder, it's all about making sure that folks who have seats at the table, it's a diverse lot, right? So that we're not just surrounding ourselves with people that, you know, are like us. And so what do you do to make sure, to whether it's your faculty, whether it's your administration, whether it's the student population and base, that it's diverse? And again, we've just got about 50 seconds here.
So we have started participating and have been participating for a while in a number of programs that allow us to attract more diverse students. We partner with the National Black MBA Association, the Hispanic MBA Association, with the Forte Foundation to get more women in. We're actually pretty proud of our diversity statistics in all of our programs. We're not doing so well in faculty. We've just partnered with the Big Ten deans to start a program for underrepresented minorities in PhDs. So we can attract more diverse candidates to the academy and, you know, have them grow into professors. So it's going to take a multi-pronged approach. I don't think any one single strategy would work, and all of us have to, you know, roll up our sleeves and get to work.
Yeah, and that representation at the professorial and the instructor level is key. Interesting to hear what you said about the cases, because really rethinking the entire curriculum, it seems to be one of the things that everyone's going to have to take on. Ritu Agarwal, she's the interim dean at the Robert H. Smith School of Business at the University of Maryland, joining us on the phone from College Park. Let's get out now to San Francisco and Ed Baxter. Hey, Ed.
Hi, Jason. Newly released audio shows President Donald Trump misled, if not lied to, the American public and the world when he said the coronavirus was like the flu and would go away. Today, he says he was acting as a leader.
We just don't want to use the best word is panic. We don't want to have to show panic. We're not going to show panic. And that's exactly what I did. And I was very open, whether it's to Woodward or anybody else. It's just another political hit job. But whether it was Woodward or anybody else, you cannot show a sense of panic, or you're going to have bigger problems than you ever had before.
So use the term hit job. Now, with his permission, Bob Woodward recorded interviews over a number of months. CNN has released part. This goes back to February 7th.
It goes through air, Bob. That's always tougher than the touch. You know, the touch, you don't have to touch things, right? But the air, you just breathe the air. That's how it's passed. And so that's a very tricky one. That's a very delicate one. It's also more deadly than your strenuous flus.
Which is not what he was saying into March, even April. He said 5 times more deadly. Now, picked up today by Joe Biden, of course, on the campaign trail.
He had the information. He knew how dangerous it was. And while this deadly disease ripped through our nation, he failed to do his job on purpose.
Mr. Trump spokeswoman Kayleigh McEnany earlier explained that the president did not want to hurt the stock market or hurt the economy. U.S. cases increased today 0.2% day to day. This is August 9th. And New York City will be slowly reopening inside dining the end of the month. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thanks so much. You are listening to Bloomberg Business Week. Well, one of my favorite things to read on the Bloomberg these days, the WFH tracker. Carol, I love this. This
from
is
home. It's
such
great.
a classic Bloomberg approach to this. I mean, we've been very successful, I think, especially given how fast-moving the virus headlines are, given how fast-moving our protest coverage is, this sort of format where basically we're like bringing it to you all the time.
Yeah.
And probably one of the fastest-moving stories right now truly is, how's everybody getting back to the office? And big banks continue to weigh in. We talked to Michelle Davis yesterday about her great story with Sri Natarajan around the sort of subtle pressure, maybe not so subtle pressure, that a lot of bosses are putting on their employees. Goldman, they are implementing a rotational policy.
Right. They're bringing more employees back to its office. This is according to a memo that was shared with staff. And so they announced today that its division heads are laying out plans in the coming days to bring back people who are able to return to their regular workplaces, according to that message. The bank's going to cap total attendance. They're going to follow any limits set by local health authorities. They wrote, this rotational approach will not look the same for everyone. And so they're going to offer greater flexibility to those managing health conditions and family constraints, or those who are not comfortable commuting to the office during peak hours. And we've seen similar plans in JP Morgan. They've brought, we talked about this yesterday, about half of its deal makers to be in the office on any given workday. That's up from 25% previously. You know, Citigroup, they brought back some employees over the summer to their headquarters, and they kind of delayed some plans for some other cities as there were virus cases going up, and apparently they're reviewing some of their plans post-Labor Day.
It's tricky. This is going to be tricky. It's going to be tricky throughout the fall. And I do think that, like, if you're comfortable thing, it gets very, very fuzzy.
That's the key, because my husband and I always talk about that. You know, what's comfortable to you might not be comfortable to me, and especially when you're dealing with the virus, and all of our situations are very different. So, yeah, it's going to be tricky. It's going to be a tricky fall, no doubt about it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the companies out with earnings after the close of trading, GameStop second quarter comparable sales down 12.7%. Estimates were for a drop of 20.9%, but GameStop is continuing its suspension of guidance. Shares of GameStop after hours, they are moving lower, trading now down by just about 11.5%. Stocks did rebound from a three-day rout as dip buyers poured into beaten-down tech shares to send the NASDAQ 100 index to its best day since April. Today, we saw the NASDAQ 100 index up by 3%. By comparison, NASDAQ Composite Index up 2.7%. The NASDAQ Composite Index up 293 points. S&P up 67, up by 2%. And the Dow Jones Industrial Average up 439 points, up by 1.6%. 10-year down 5/32 with a yield of 0.69%. Gold up 0.8%, 19.47 the ounce. And West Texas Intermediate crude advancing 3% today, 37.87 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, no doubt about it, my co-host Jason Kelly is obsessed with Mulan. And yes, Disney's Mulan, and safe to say that would probably be the case even if he didn't have a 2-year-old.
I like Mulan. I think it's a great movie. I mean, the original, the OG Mulan.
Which made Disney about $1 billion. So a killer movie and brand. We're all obsessed with, I think, Disney overall. And so we want to get into a story that I feel like, Jason, you and I have been talking about. This has really been on your radar big time.
Totally.
About a situation, how they are handling it, and it may turn out to be a true test of their corporate culture. So let's get into it with Chris Palmieri, LA Bureau Chief for Bloomberg News. He is on this story big time, talking to Disney. He joins us on the phone from LA. So, Chris, Mulan was supposed to be a sure thing, right? I mean, this was a blockbuster for Disney, the animated film, but it's not necessarily going the way they thought it was, at least this...
First of all, I just want to see, Jason, I agree with you. I think the original Mulan is probably the best of the Disney animated movies, maybe Lady and the Tramp, but that's it.
Oh, my God. You two are adorable.
It's terrific. It's a really good movie. It's so compelling. It's imminently rewatchable, I have to say.
Yeah. So this was an attempt to, do what Disney has done so well, recently with Jungle Book and Beauty and the Beast and such, is do live action remakes of these classic animated films. And, this was, they tried to do everything sort of right this time, an entirely Asian cast, whereas in the past they had non-Asian actors voicing the characters. They really studied the culture. They made this more of like an epic, war movie in a way. It wasn't a musical like the first one. And then, March it was supposed to debut. They had the red carpet premiere and everything, and then COVID hit. And things have just gotten